Welcome to Any Answers Answered. This is a slightly special Any Answers Answered in that rather than looking at a particular or two particular questions that people have asked, we've been asked by accountingWEB to have a look at a particular topic which is being asked time and time and time again, and hopefully in 5 minutes or so Tim and I will be able to make sure you are completely happy with this area of tax. We are talking about the allocation of the personal allowance. We are talking about the interaction of interest, of dividends, of earnings, etc., etc. It is a bit of a minefield, Tim.
If an individual has multiple sources of income, the first thing we have to do is allocate the different sources of income to the rate bands, ignoring any allowances or reliefs, but to the basic rate, the higher rate, the additional rate band. And there's been no change in recent years in the way in which we do that. And as most viewers and accountingWEB subscribers will know, you allocate first non-savings income. In other words, employment, self-employment income, pension income counts as employment income, rental income, etc. You allocate the non-savings income first to the basic rate band, then higher rate, then additional rate, followed by the savings income, which can be broken into two: interest, which is the first part of the savings income to be allocated to those bands, and finally dividends. So if you're looking, for example, at a director shareholder, first you'll allocate his or her salary or director's fees, then, assuming no other non-savings income, interest, then dividends. Now that hasn't changed. The second issue for us is the offset against the different types of income of the personal allowances and any other reliefs that go against general income. It's easy just to think about personal allowances, currently 11,500, the standard personal allowance, but of course many taxpayers will also have qualifying interest if a director had borrowed money to invest in shares in the company, or a partner similarly borrowing for the business, or there may be sideways loss relief. Anything that is available against general income will be added together with the personal allowance, and the allowances and reliefs have for a very long time, under Section 25 of the Income Tax Act 2007, been able to be offset in the way most favourable to the taxpayer. Now, it is easy to assume that the allowances and reliefs should be offset in the same hierarchy, first against non-savings income, then against interest, then against dividends. But the complications introduced by primarily George Osborne in the form of the personal savings allowances and the dividend tax allowance, those complexities mean that in quite a large number of cases, it is not advantageous to offset the allowances and reliefs in that order, and we should instead work out whether it's better to set them off against perhaps dividends in priority to non-savings income and interest.
Okay.
And that's the complication that has caused the revenue themselves very significant difficulty this year. If we now go into the particular additional reliefs that go against either interest or dividends.
Okay.
First, for interest, Gordon Brown introduced the savings rate band, and it is now £5,000 at 0%. But the savings rate band, and this is somewhat bizarre and causes further difficulty in the computation, the savings rate band is first allocated to non-savings income. And this means that if an individual has got employment income, let's say, of £20,000 and interest of, let's say, £2,500, unfortunately, they won't benefit at all from the savings rate band because the £5,000 of savings rate band is allocated to the employment income after deducting, in that case, the personal allowance, but it would absorb all of the 5,000, and if it's allocated to the non-savings income, it doesn't qualify for 0%. And so, in simple terms, this year it's only individuals whose non-savings income and that would be employment income, self-employment, rents, etc., fall below 16,500. That's 11,500 personal allowance plus the 5,000 savings rate band. If it falls below 16,500, for example, if it was 15,000, you would have a spare 1,500 of the savings rate band that could be allocated to income.
On top of that, we said before £16,500. Let's say I had £17,500 of interest. Well, my 11,000 personal allowance will cover, my £11,500 will cover some of it. That leaves 6,000. The first 5,000 is covered by the starting savings rate band, as we've just described, and then we have the personal savings allowance as well.
Exactly. So once you have allocated allowances and reliefs and allocated the savings rate band, then if there's any interest left over, the first 1,000 of that will qualify for the personal savings allowance, but only provided that you're a basic rate taxpayer. So as long as your income doesn't take you over the basic rate threshold, you'll then get 1,000 of interest at 0%, which means that some will qualify for 6,000 of interest at 0%, depending on whether they've got non-savings income or not. Others will only get 1,000 at 0%. But if you tip over into higher rate, instead of 1,000, you only get 500. And once you head up to the stratosphere of additional rate, you get no personal savings allowance. The dividend tax allowance, introduced last year by George Osborne, and currently £5,000 at 0%, but Philip Hammond has said it'll reduce next year to 2,000 at 0%. That works slightly differently from the savings rate band, because that will be available irrespective of your other income. It is never allocated anywhere else, whereas the savings rate band, as we've seen, can be, and it's not affected by your overall marginal tax rate. And so the example I've used in the past is Bernie Eccleston, whose income is goodness knows what, is, like the rest of us, entitled to the first 5,000 of dividends at 0%. And it will be allocated to whichever the first band is that your dividends fall into. So if you've got somebody with, say, 50,000 of salary and 200,000 of dividends, the 50,000 of salary will get up into the higher rate, and then the dividends are taxed first at higher rate, then at additional rate. Well, the first 5,000 of the dividends that would otherwise be at 32.5% higher rate will in fact be at nil, although that 5,000 uses up that element of the higher rate bracket. And that's the way that 5,000 works. The complication that you were then referring to is that because of the way in which switching personal allowances from higher rate dividends onto basic rate non-savings income can release some of the basic rate band to cover dividend income, can mean that it's better to allocate the personal allowance in a non-intuitive way and get a lower tax rate. Now, at this point, I cannot explain it. My spreadsheet can, and other software companies have done the calculations, but this is where it gets ludicrously complicated, and good luck, exam candidates.
So let's have a couple of examples. We had one there. So I've got a salary of £50,000.
Yep.
I've got dividends of £9,000. There's nothing really we can do to reduce the bill from the obvious, if you like, which is personal allowance against salary, basic rate against salary. We would still have a little bit of salary at 40%, and then we're into that dividends.
However, if I were to reduce the salary figure to, let's say, 41,000, and again, this demonstrates that it is not at all intuitive. If I reduce that to 41,000, of salary, 9,000 of dividends, so total income of 50. Oh, here I allocate 7,500 of personal allowance to the salary and the other 4,000 to the dividends. Well, now that I've seen that, I do remember why that is. It's because it's better to restrict the personal allowance that you allocate to the non-savings income to the amount that will leave just the basic rate band on the non-savings income. So with 41,000, I only want 33,500 of that taxable, and so 7,500 is the personal allowance I allocate to leave the other 4,000 to go against the dividend.
So what I've done there, what we've done is we've taken £4,000 of the salary out of the personal allowance. We've put 4,000 of the dividend into the personal allowance. The effect on the salary, that would go in at the bottom because we have to do earnings, savings, dividends. So that would be at 20%. And then we have 4,000, and that the 5,000 dividend left over is now the only 5,000 above the personal allowance. So that's in that 0% on the first 5,000.
Exactly.
So we have saved 12.5% on £4,000 by restructuring in that way.
Whereas once we'd put the salary level up to 50,000, that didn't work because the top part of the salary is being taxed at 40%, so it's better to use the personal allowance entirely against that.
Okay.
But it's clear as mud, isn't it?
Absolutely. And of course, this is where, which is where a lot of the questions had come from on accountingWEB, this is where the problem has arisen because of the rewriting of software, because of the preparation for this, the returns being submitted for 16-17, there are all sorts of different answers out there which can be very misleading if we're not careful.
Can I just add one rider? The figures that we've just got there, 41,000 salary and the rest of it was 9,000 of dividends. The allocation of the personal allowance was 7,500 to the salary and 4,000 to the dividends. Okay? Mm-hmm. If you're looking at a Scottish taxpayer, then, and I'm just doing the calculation, because of the Scottish basic rate band being 2,000 lower than in the rest of the UK now, in fact, you should allocate 9,500 rather than 7,500 to the Scottish salary, and only 2,000 to the Scottish dividends. It's just ridiculous. Because
there is this issue that rather than 45,000 being the point at which we move from basic to higher, it is still 43,000 in Scotland. And so we have to perform the calculation very differently. But of course the 43 only relates to the non-savings, non-dividend income.
That's right.
Making it even more complicated. Hopefully we have been able to help you understand this a little bit better. We have those, I guess, four fairly fundamental things. We have the starting savings rate band, we have the personal savings allowance, and we have the dividend £5,000 allowance. And then we have this key point, which is the use of the personal allowance should be in the most efficient way possible for that particular taxpayer. And as a result, sometimes it'll involve you using things in orders you could never have imagined would be the sensible way to do it. Hopefully useful. Do join us again when we will try to answer some more of your questions on Any Answers Answered.